Welcome to another episode in the DLAI Fintech Conclave 2023 podcast series, brought to you by the Digital Lenders Association of India and India Fintech Diaries. In today's episode, we attempt to demystify integrated finance and its implications for the fintech ecosystem. And to help us do this, we're joined by Anurag Jain, founder and executive director at KredX, India's leading cash flow solutions provider to large corporates and SMEs. An IIT Kanpur alumnus and a techie turned entrepreneur with 18 plus years of experience in the financial services sector, he has had vast experience in driving business growth in companies like HSBC, Oracle, and Tavin Technologies before co-founding KredX in 2015. A seasoned finance professional, Anurag is passionate about solving complex issues and disrupting the status quo in the supply chain finance ecosystem in India. He has also been involved in policy advocacy for the fintech lending ecosystem and is a founding member of DLAI. I am your host, Elroy Sarao, and this is India Fintech Diaries.
Welcome back to India Fintech Diaries, the show where we discuss all things India Fintech. We have kicked off this year with a very special series in partnership with Digital Lenders Association of India, and we are thoroughly enjoying speaking to the amazing guests from DLAI. And continuing in that series today, we will touch upon the topic of integrated or embedded finance. And to help us demystify it, we have with us Anurag Jain, founder and executive director at KredX. Welcome to the show, Anurag.
Thanks, Hemant. It's a pleasure to be here.
Anurag, you're really well known in the industry, but still, it would be good if you could provide a quick introduction of yourself and the story behind how KredX happened.
So basically, when you talk about KredX, when we started conceptualizing KredX, there were two aspects to it, or two sides to it. On one side, if you look at a country like India, which is growing at a 6% plus GDP growth rate on a continuous basis for the last couple of years, there is definitely a big demand for credit, right? If the businesses are growing, at a rapid pace, the consumption is going up, and the businesses are scaling up revenues on a yearly basis. There is a lot of demand for credit on one side. On the other side, if you look at it, India has been one of the countries with the largest, the highest savings rate. So there's a lot
Right.
of money stashed in savings instruments, in low yielding fixed deposits and other instruments which are not even beating the inflation, for example. So when we conceptualize the company, right, the idea was to connect these two sides and being able to create a trusted bridge that is able to move money from one side to the other, so that we are able to give an asset class which basically gives above average returns to the investors, and on the other
Hmm.
side, we are able to provide those funds to the businesses or SMEs who are basically credit starved and are not being able to access funds through the mainstream economy. So that is how we started, and bill discounting came out as the first product that we thought we could sort of start with, because obviously
Hmm.
even in today's commercial clusters across India, if you look at Delhi, Mumbai, Bangalore, and Chennai, for example, in most of the commercial clusters, bill discounting happens and has been happening for the last couple of decades. So I think that
Right.
was the first thing that we wanted to start and be able to move the money from one side to the other and solving the problems at both the sides. So that's how we
Got
started
it.
with KredX, and our flagship product has been invoice discounting, which is where
Okay.
we are basically helping the SMEs get access to working capital, and through a network of investors on the other side who are basically coming on the platform and buying these invoices, and funding the working capital for the SMEs. So that's in a nutshell what we're doing at KredX.
And Anurag, in the past few years, there has been a lot of conversation around embedded finance, and that's the space that you also play in. One industry reports I was just reading puts the embedded finance revenue opportunity at about $21 billion by 2029. So, what exactly is this integrated or embedded finance, and how big is this opportunity in India?
So embedded, as the word suggests, embedded means to fix something, firmly and deeply into something else, right? So embedded finance
Mhm.
essentially means to fix financial services or finance into any customer journey, product, or any of the workflows that the companies have. So, if you go by the definition, right, embedded finance is basically a concept that allows non-financial entities to integrate financial entities into their customer journeys, right? The way they do this is through the use of APIs, which are basically the application programming interfaces, and
Mhm.
they're essentially software intermediaries that allow two applications to talk to each other. In a layman's language, if I have to explain embedded finance, let's say, for example, we take case of an e-commerce company, for example, or maybe a travel website. So let's say you go
Right.
to a travel website, you book a ticket today, and in the
Mhm.
same journey, when you're booking the ticket, you also maybe want insurance or travel insurance for that journey. So that insurance is embedded into the same journey. You don't have to come out of the journey and buy the ticket separately and then take that ticket number to another website or another portal and key in those details and then buy an insurance, right? But you can
Got
do
it.
it in the same flow and be able to, at the end of it, come up with both these services bundled together in one shot. So that's one example. E-commerce is another example. So let's say today you're buying a product online, right? And at the end of it,
Right.
you have to do the payment, you have to make the payments, right? So
Mhm.
for that, you are taken to a separate widget or a separate encapsulated application which is there as a part of the workflow, and you
Right.
access it, you make the payment, and you come out of it, and again you're in the same flow, and you buy the product, and you're able to also make the payment for it. So embedding the finance capsule or encapsulated module into the workflow, right, is
Mhm.
basically embedded finance. And if you come to think of it, this is not totally new concept per se, but I think the way it has been sort of intertwined with the original workflow and
Right.
has made the entire journey so seamless. I think that is what is enabling the consumption or the usage of this concept across the globe.
Understood. So basically, if you look down the history at some point, say if I wanted to purchase something, my entire activity was focused on purchasing or maybe getting value out of what I am doing. At
Hmm.
some point, it get divided into me purchasing that thing and the finance related to that activity, which could be maybe I need money for buying it, so I need a loan, so I can completely go on a different branch in case of physical world, but in case of online world, I go to a different app, first apply, take the money, come back and do it. So what you're saying is now those two journeys get embedded and you actually have the core journey that the customer wants, which is making that purchase which he's going to use in his normal life. So that becomes
Correct.
one single journey.
Correct. So embedding can be done for non-financial, services as well. So let's say, for example, today, you are, running through a workflow wherein you are
Right.
verifying a particular invoice, right? So let's say you
Mm-hmm.
as a business raise an invoice to a buyer, and that buyer has to verify that invoice whether it is, genuine and unpaid. So while
Right.
that, you can also embed that workflow through an application into the entire customer journey. That is not financial, right? You're not basically dealing with any financial service over there. So that
Correct.
doesn't form a part of the embedded finance per se, but yeah, I mean, it is again a form of embedding any kind of services into the work. And when you talk about finance, it can be anything. It can be payments, it can be lending, it can be insurance, it can be investments. I mean, off late in the last couple of years, we've seen embedded crypto as well, right? I mean,
Right.
you can get into an application and you can pay through Bitcoin, for example, right? So, there are a lot of interesting use cases that are coming up, which are basically, enlarging the scope of the entire embedded finance industry.
When I hear about this, Anurag, I can't help but think that this could unlock a massive value as far as driving the Indian GDP itself is concerned. So, when you think about this space, what are these big value pools that you are most excited about or you think about when you think about embedded finance?
Before we talk about this, one of the
Hmm.
things that we should try and understand is what are the benefits of embedded finance. I mean, why has it taken up
Makes sense.
such a scale, in the last couple of years, and has reached a certain level where it's raring to go even higher. So
Right.
some of the benefits, if you look at, are for the companies is it increases the competitiveness of your product. So let's say today, for example, if you talk about a travel website, right, there are certain websites who are providing insurance on your travel ticket, right, wherein if for whatever reason your travel gets cancelled or postponed, you get back the entire amount. The fact that there is a possibility of getting back the entire amount, which has been a rarity, maybe a couple of years back, drives people to that website, drives people
Mm.
to that company, because there now there's an option for you to be able to pay maybe a couple of bucks extra and be able to get that security. So
Right.
some of the other competitors are getting impacted because of it. So the customers are getting driven to your product, so that is kind of increasing the stickiness of your product. Now when that starts happening, right, it starts increasing your conversion rate, right,
Right.
and subsequently your revenue. So it creates a very an exponential impact on the revenue of a company, right? And
Mm.
then there are other secondary benefits. For example, I mean, when you are providing, let's say, an insurance or a lending product or any other product, by embedding it into the workflow, you are able to get a lot of other customer data. For example, I mean, when you talk about an insurance, maybe you take the name of the nominee, their phone number, your dependent details, your residence details, and so on and so forth. So when you start getting some of those details, you can start orchestrating it into your analytics and be able to derive a lot of insights about the consumer, which further creates stickiness and gives you that advantage to be able to maybe cross sell or maybe able to take benefit of that customer in the longer run. So when you talk about these benefits that accrue out of
Mhm.
embedded finance, they start creating a very exponential impact. And when you talked about the numbers and close to $21 billion of impact, I think there was a report in Forbes. As per
Mhm.
that report, this number is expected to go tenfold in the
Wow.
next 10 years. And largely, a large part of it is still payments, because that's how traditionally the embedded finance started. But I think
Right.
use cases like insurance, for example, today when you go to
Mhm.
IRCTC and book a train ticket over there, right?
Right.
There is an option to get an insurance without coming out of the journey, right?
Mm.
When you go to a shared mobility app, for example, right, and in cases where you're going to an airport, right, there is an insurance that is available in case you miss your flight. So some
Right.
of those use cases are also becoming prominent now, and people are accepting and utilizing some of these use cases to make their life easier and better. So there will definitely be a very very transformational impact, and as and when some of these verticals converge, I think the net impact will lead to the creation of a lot of value in the longer term. So it's very difficult to
Right.
quantify at this stage, because
Mm.
there are a lot of use cases are still to see the light of the day. But I think it'll definitely have a very big impact in the longer run.
And with some of the use cases that you're most excited about?
After payments, I think
Mhm.
lending is one of
Yeah,
the
I think so.
biggest
Correct.
piece.
Mm.
And I don't know whether you've read the report of the working group on digital lending. They
Yeah, I
actually
did. I did.
talk
Mm.
the concept of embedded credit, which is obviously slowly gaining traction. And there is, as they identified, that there's a need for regulatory attention over there. So
Correct.
one classic example would be BNPL, right?
Mhm.
So we've seen a sporadic growth in the BNPL industry in the last couple of years. Now, again, I mean, we've talked about the benefits of embedded finance, but if you look at BNPL as a specific case today, I'll give you one classic example. So
Mhm.
look at corporates, the value chain that they have, where they're making payments to their distributors, right? So in case the corporates are able to secure credit for their distributors, there is a probability that those distributors are able to survive the cash flow crisis that they face on a regular basis. B, there is also an increase in revenue that happens subsequently, following the credit that these distributors are able to get from the market, right?
Hmm.
So basically talking about the B2B use case, right, where you're talking
Understood.
about distributors who are able to secure that credit and is able to buy from the corporate, increasing
Hmm.
the sales corporate, as well as ensuring that they have sufficient time for them to be able to sell the product or services that they have got from the corporate, right? So when you talk about embedded credit, I think BNPL has been a very very strong use case in the last couple of years, with a lot of companies across the globe sort of becoming billion-dollar companies and taking this concept to the next level. I
Yep.
think there are different use cases on the B2C side as well, which
Hmm.
BNPL has successfully solved. And one classic example has been providing credit for purchase of white goods, for example,
Right.
phones, laptops, and other goods that they are buying on e-commerce websites. So I think embedded credit, I would rank it as the next big opportunity.
And Anurag, if you think of, there are multiple participants involved in the entire value chain, right? So, what are the different capabilities that these different participants in the embedded finance journey need to have to really make use of this opportunity?
So before talking about the eligibility, maybe I can spend some time on identifying who are the participants in an
Absolutely,
embedded finance
absolutely. Yeah,
journey, right? So
yeah.
typically there are majorly three, but if you include the end consumer, there are essentially four participants. If you look at the embedded finance journey, and
Hmm.
these are embedders, enablers, and providers. So
Okay.
and we'll pick it up one by one. So providers are essentially the balance sheet, providers in the entire value chain. So these are the
Hmm.
banks, financial institutions who are basically providing regulated financial products, in the entire value chain. These are the guys who are actually booking the loans or booking the insurance. Then you have the enablers, who are the intermediaries, and this is where the the fintechs and the big techs or the tech fins come into picture. And these are the guys, these are the entities who are providing applications to link embedders and providers. The third one is the embedder. So embedders are actually the brands who embed these financial services in their customer experience. So if you look at the entire value chain, you have the embedder,
Hmm.
who's actually embedded that financial service as a widget, or as an application or a tool inside their customer workflow. And when
Hmm.
the customer is in that journey, when the customer is accessing that widget through these enablers, they are able to access the services which are provided by the providers. So while I mean it's pretty simple to be able to draw this diagrammatically, but if you look at the roles and responsibilities of some of these participants over the
Hmm.
last couple of years, what we have seen is that the responsibilities have been overlapping, right? In some cases the provider also acts as enabler, right? In other
Right.
cases we also see provider acting as both enabler as well as embedder.
Hmm.
So there's no fixed role. I mean, especially when you talk about the providers, they have the regulatory wherewithal to be able to act also as an enabler as well as embedder. So at
Right.
times they create these overlapping responsibilities in the value chain and be able to play a bigger role, because at the end of it, I mean, when you talk about the revenue share, right, the majority of revenue from embedded finance lending products, right, comes to the balance sheet provider. So just one
Hmm.
figure, if you look at it, in
Hmm.
2021 in United States, out of the 14 billion that came as a revenue for these embedded finance providers,
Hmm.
55%
Hmm.
55% of it went to the balance sheet provider. So I think they have the heft, they basically control the entire sort of journey, and gets a lion's share of the revenue that is coming out of it. And largely so because they are the ones who are bearing the risk of credit default as well. But having
Correct.
said that, I think, in different cases they've been playing different roles and overlapping roles with the, as an enabler, and as an embedder as well. So, in terms of the eligibility, I would say the providers are the guys who are the ones who are regulatory compliant, who hold the licenses from the regulators. So these can be banks, these can be NBFCs, or other regulated entities who are there.
Mm.
Enablers, of late there has been a term being used for the enablers who are there, as an intermediary, who
Mm.
are not actually holding the the lending license, but they are the ones who are providing applications linking the embedders and the providers, and they are the LSPs, or the loan service
Yeah.
providers, basically,
Mm.
guys who
Mm.
are essentially creating, interconnecting both the embedders as well as the providers. Then you have the embedders, who can be actually brands, or who can also be fintechs, who are basically providing maybe a different kind of services. So I'll give you an example. Let's say an accounting software, cloud based accounting software provider today wants to expand or provide bill discounting services to the businesses who are using their accounting software. In this case, the embedder will be the company who's providing the accounting software. The enabler would be the company who's providing those bill discounting services. And the provider would be the guy or the entity sitting at the back end who's providing you the capital to be able to facilitate the credit which is involved in the entire transaction.
Got
So
it.
that's how you have an entire stack of embedders, enablers, and providers. And at the end of it, you have the end users who are the ultimate consumers of integrated product offerings. And you can have multiple use cases across, whether it is BNPL, lending, insurance, investing, payment, and so on and so forth. As the ecosystem evolves, we continue to see new and new use cases coming up on the embedded finance side.
And Anurag, there is a lot of digital public goods being created, which looks like is going to support this journey as well. You have the account aggregator, you have the Open Credit Enablement Network, which is also called OCEN, and you also have the Open Network for Digital Commerce, which is ONDC. So, in your opinion, what is the impact digital public goods like these are going to have on the embedded finance space?
They are helping structure the overall constitution for embedded finance, because some of these models have actually helped create those tech stacks. For example, India stack, right?
Mm-hmm. Mm-hmm.
It has been able to create that tech stack on which there are so many applications have been built today, which do not have to reinvent the wheel, right? I mean, when you talk about,
Right.
let's say, eKYC, you talk about presence-less, paperless kind of experiences that are being given, right? So
Right.
all of these are there because of some of these models that have come in. And all the newer models are being developed on these underlying models which are already there in the market. Oken is another example, as you said, Open Credit Enablement Network, where you're talking about a network where the providers, the enablers, and the embedders all are working together to be able to create an ecosystem. See, one of the
Mm.
biggest problem that comes in when you talk about a big network where you have multiple participants coming together and facilitating transactions and services for each other is the effort to get them onboarded, because there are multiple incentives required. For example, I mean, everybody starts questioning as to why should they come to the bigger network, who's getting benefited, what will be the standard norms over there, whether it will fit with their existing compliance or not. So there are a lot of other things that become a problem. But when you have these standardized set of APIs, it's very easy to actually connect and integrate these providers with the enablers as well as embedders, and create that seamless transaction network. And once you have those standard set of APIs or a common language for the lenders and the marketplace, it becomes easier for the products also to scale and reach a certain level. Because let's say today, when you talk about a lender, right, and a fintech company, so for every lender, you have a different set of APIs that you have to integrate with, and that's a very
Right.
very time consuming and and a futile exercise for most of the fintechs as well as banks. So if you have a
Hmm.
common platforms like OCEN or you talked about ONDC, some of these common platforms, it becomes far easier and more predictable for some of these players to come in. And I think Indian ecosystem has learned from its experiences, right? So it's not that some of these paradigms or some of these models came in one go. I think there's a lot of trial and error and that has gone into it to be able to learn from that experience and come up with some of these new models that are now defining the
Absolutely.
entire ecosystem.
True, true, true. So, Anurag, as a parting thought, what are the two or three most top of the mind things that you think the policymakers can do to really support the embedded finance journey a bit more, or really help everyone make the most out of this opportunity?
I think this is something I really feel for the Indian ecosystem is that the pace at which the innovation is moving, right?
Mm-hmm.
It's very difficult to actually, regulate at the same pace. I mean, it's like a country, bursting on seams, and then you are, preparing an
Yeah,
infrastructure for that city. In a similar way, when you talk about some of these concepts, on the embedded finance side, it's not just India, right? I think regulation has been a challenge across the globe. I think the regulators are also sort of evolving, in addressing some of these newer, concepts, and
right.
I think it's everybody's learning together, so it'll maybe take some time for both the sides to evolve and be able to reach a stage where there is a significant chunk that can be regulated. So before you even regulate it, you also need to understand what needs to be regulated, and it has
Correct.
to make sense from overall perspective. So I think it will continue to evolve. So
Hmm.
while in India, there's no specific set of legislations, for the fintech market per se, but I think some of the initiatives from the regulator side in terms of the fintech vertical that has come up, in terms of the digital lending guidelines that have come in from the regulator, I think these are some of the things that are setting the highway for the industry, that while you have to reach a certain destination, you have to use this highway, you can't get out of the highway, right? So
Yeah.
I think there are these broader guardrails which are being created, which will help industry to move in the right direction.
Amazing, Anurag. Thanks a ton for joining us today. It was really a pleasure hosting you on the show.
Sure, thanks, Hemant. It was a pleasure talking to you.
So, Anurag, if our listeners want to get in touch with you, what's the best way for them to do that?
So I'm available on LinkedIn. They can reach out to me at anurag@kredx.com, and
Awesome. Mhm.
I'll be more than happy to connect with anybody.
Excellent. So, Anurag, will include those details in our show notes. That's it from India FinTech Diaries this week. Stay tuned as we speak to more amazing folks from DLAI and give you a summary of what happened at the recent DLAI Fintech Conclave 2023 in our upcoming episodes. And until next time, stay safe.